Hello, in this video we'll be adding Martingale EA to one of our previous EA which we coded in full on this channel. So here is what Martingale is. For a recap, let's assume we bought at this price, right? Then the market comes down against us, let's say at 20 pips. Then we have another buy either at higher lot size or the same lot size. Then we buy again, then we buy again, then we buy again, then we buy again. So we are expecting that the market reverses. Maybe when the market comes around this area or this area, by that time we'll be in a cumulative floating profit, so we'll be able to close with that at that level, right? So that's what we are hoping for. And that was the end of Martingale. So when you martingale, you are hoping that the market will reverse into that direction of the first position and sufficient enough to close all the open position. So that is what martingale is. So it is dangerous in the case where your first direction is totally wrong and the market is not even going to go to that direction for a very long time. So martingale strategy is good, but at the same time it is dangerous. So let's quickly get into it and add it to our MACD price action EA. So I'll put the option here. So in the case where the user wish to use Martingale, so I'll say use Martingale. So by default, you know what, let's keep it as false in case the person doesn't know what Martingale is or is not confident about the usage. So the first thing is martingale distance. So at what level should the distance be? So we can say martingale distance should be maybe at every 20 pips. So martingale distance at 20 pips, right? Then the next thing is now, like I said, sometimes we want to increase the lot size, right? So we can see martingale multiplier or lot size multiplier. So let's just say multiplier. So we leave it by default to be 1 so that to use the same lot size. So you see this to be multiplier, right? Then we consider break-even price, martingale break-even, BE. So basically, I've explained before that we have different kind of way to get out of our martingale position. Either we have a fixed TP for every martingale position, so they have a common TP. So when that level is reached, it will close it using that common fixed TP, or we close when the cumulative floating profit is $1. So martingale break even. So we can leave this on this, right? So now where should we put our martingale? So we can put our martingale, you know what, let's remove this. So we put this here, let's put it here, right? Then we say martingale, and this is if we are trying to use martingale, right? Then we say if the position type of the last position is buy, right? And the achieve is less than or equal to. So this is the martingale target, right? So mat, let's just say mat, right? So that will be martingale distance multiplied by the point. So we are dealing with pips, right? So we need to multiply by 10. Then lastly, we can just say minus 10. So, or you know, we want the negative form of this, or we can say negative 1 times martingale distance times points times, so whatever value we are getting, let's say we are dealing with Euro USD, so automatically we'll be getting 0 minus 0 point, we'll be getting something like minus 0.0010, right? So that's what we'll be getting when the gap between the current and the entry, so that means it is not in profit, it is in loss, and the loss is up to 10 pips. So that is what we mean here. Then what we want to do is we want to enter a new position. You know what, we can just return the new position and say trade buy. Okay, you know what, let's put it in in a block. So basically we want to you want a new lot, right? And the loss will be calculated based on how many. So we'll be saying the so we'll be saying the first lot size, which is lot, right, multiplied by the power of the multiplier, math multiplier, right? Then how many position is currently open. So currently we don't have a way to get the number of position open, right? So we can easily get that. So let's quickly get the number of position open. You know, I'll just copy this, paste it here, right? So I'll say this is total positions, right? Then this is the count, right? Then each time there's a position, what you want to do is you want to say count plus plus, right? Then you want to return the count. So this is the number of positions, right? So we can say count, right? What we want to do is we want to also make sure that we are only setting break even if this count is just 1, because by the time we introduce this, sometimes the count will be more than 1. So if the count is just 1, so let's say the Martingale has taken over, there is no point having break even on any of the position. So we need to get that. Now this is fixed, so this will be doing 0.01. let's say 0, we start with 0.01 multiply by, let's say 2 raised to power the number of count. Let's say we are dealing with the first position, so that will give us 0.02, and the next one will give us 0.04. So this essence of using this method and not just using the previous positions, previous lot size multiplied by the multiplier, is that in the case where the starting lot size is small, let's say 0.01, and maybe the user is trying to use the multiplier of 1.3. So you see 0.01 times 1.3 will give us 0.01 blah blah blah, and automatically it will not be fit enough. Even if 0.01 is a perfect lot size for the next one, it will affect the third one and the fourth one. But using this method, it will automatically get the cumulative lot size. So this is what I mean. So let's assume we are using 0.01 multiplied by 1.3, right? So it will give us this, and we need to round this up. So we will be forced to use 0.01, and by the time we use previous lot size again for the third Martingale position, we are still going to get this, and we are still going to get this, and continue to get this. So we'll be forced to use 0.01 all through, right? So that is what it means. But if we can say 0.01 multiplied by 1.3, right? Then the value you get, still multiplied by 1.3 for the third position. Then that will make us have 0.02 for the third position. And in the case where we want to go for the fourth position as well, so we can easily say multiply by 1.3 again, and then we will have 0.02. Then the next one we can say multiply by 1.3 again, then we have 0.03. This is a better approach compared to just saying the previous lot size multiplied by the multiplier. So that is the point of getting the count. So now, what is the first parameter? I think the first parameter is the new volume, right? And the next argument is the pair. Then at what price? The ask price. Then what should be the stop loss? We don't want the stop loss. We don't want to take profit. So you can go ahead and get the break-even TP for all the Martingale position and add it here. But I'm not interested in that. So then the next one, we want to say else. If position type equals position type sell, right? And the entry minus the current is less than or equal to martingale distance, right? What I want to do is we want to do the same thing here, but you know what, since we are dealing with the same style, we can just put them here. So then we can just return. Oh, we can't return anything since we are dealing with a void. We are dealing with a void function. Sorry about that. I'm used to you returning integer. So you know what? We won't be returning anything. So this is sell, right? Then the new it is, and the price is the bid price 0 0 comment, right? So we can save and compile. So that is that. So another thing we should also plan for is the break even for the martingale, right? So now, in the case where we are dealing with martingale, right? And let's say, so you can say break even here, break even. Then if the count is greater than 0, greater than 1, and the total profit, we will calculate that now. The total profit is greater or equal to the martingale BE. So what we want to do is we want to close all positions, right? So this is what we want to do. So let's quickly get this as well. So you know what, I'll just copy this. So what is the name of this? We call it total position, total profits, right? So here you go, but this will be double. This will be double, right? And I'll call this profit. So what we want to do is we want to say okay, let me put it in a block. I want to say profit plus equal the profit of this position. So you can also include maybe the commission or this and the swap. Let's just leave it like this. Then we want to say return profit. Also, we want to close our position, right? So oops. So you also want to close our position from the back, right? But this is not necessary. You don't have to start from the back. You can start from any point. You know what, this should return void. So, and we don't need to sum up the position profits. So all we need to do is each time you get to the position, just close position, close, then use the ticket to close it, right? So we don't need to return anything as well, and that should work. Now let me save and compile. Alright, so we are good to go. So let's quickly backtest to see if it is working. So I'll go for my strategy tester, right? So you can see, in the case where you don't have a strategy tester, just go for view, then you go for strategy tester, right? Then you select the expert advisor. So this is our expert advisor. We have our symbol, right? Then we leave it like this. You can just stick to this. Now let's go for our martingale. So let's just set it to true, right? Then this should be martingale. You know what, let's make it 50. 50, right? Then the multiplier, okay, you know what, let's use multiplier of 1.3, so I'll be able to see what I'm trying to explain the other time. So I'll just start trying to reduce the speed. You know what, let's take this lower. I'll remove the grid. Then let's see. Okay, I think there's a potential problem. So now that we are using Martingale, so why not say whenever we are using Martingale, there should be no stop loss, because by the time before, most likely before the EA set up the Martingale, the stop loss will kick in. So why not just use um why not just use 0 whenever there is Martingale in place? We come here and we will say, even if you'll be using targets, right? So in case where you are trying to use Martingale, right? So what I want you to do is I want you to set the stop loss back to 0, right? So only TP should be available. So that is what I want. Now save, now compile. So instead of going through all of this, since we realized that the starting position was done on the 12th of January, so why not just start our back test instead of having to wait again? So I'll quickly remove, make it collapse. Okay, that's very good. So we have our first position, right? And we don't have a stop loss. Okay, I think you should have kicked in. So there is a problem. So you can see it has passed. It's okay. So it's saying invalid volume. So you can see. So what we can do is you can easily round up our lot size, right? So that means this new lot size that we are proposing. So we need to round up this to the nearest step allowed by the broker, right? So we can easily create a new function. So let's create the function, right? So we call it round off lot size. So basically we've created this kind of function, exactly this function in the course, right? So let me quickly create it again. And what this will be doing is it will return mat round, right? Lot size, the lot size specified, right? Then divided by this step, then multiply by the step. So what is the step? So the step is the step can be gotten from by the EA, right? So we can easily say this symbol volume step. This is it. Oops. So just put our semicolon, we save and compile. Okay, we have no error, but we need to use this, right? So just put this here. So whatever value this calculation is getting, it will pass it down to this function, and this function will get the actual lot size. So in the case where it is getting 0.013, so it will round it up to the nearest lot size, and I mean to the nearest step, and it will return 0.1. That should be fine. I also realized that this is a very small distance for gold in particular. So it is very small for gold. So we can say 100, and let's see that in action. You know what? I'll make this shorter. Then I'll remove this grid. And let's start. Okay, so now you can see there was a position here. Then also at this point, which is 100 points, it created another one, another sell position. Then when the combined floating profit of the two position gets to 1, it's closed the position. So that is what happened there. So it has protected our position and end up having a profit position. So that is the beauty of Martingale, and it is dangerous, like I said, in the case where the initial position is totally wrong and the market keeps reversing. So that's that. You can continue testing it. Also, you can optimize this particular modification to get the best value for the martingale distance, the martingale multiplier. So please optimize and be sure of the right parameter. Also, this is for educational sake, so you shouldn't go ahead and blindly use an EA all because you see me developing this. You should try to understand the EA before you go into using it. And this project should be used on demo account. I'll be developing more and more EA based on strategies I find online or proposed strategy either in the comment section. So in case where you find this kind of content interesting, like and subscribe. So I'll see you on the next one.